Europe's richest investors don't shout. They don't trend on social media, and yet they quietly control trillions. This is the story of Europe's quiet power, private capital. In this video, we're going deep into the hidden world of private capital in Europe, a world where family offices, sovereign funds, and generational investors shape entire economies. Silently, you'll discover who they are, how they invest, and why this quiet money might be the smartest money in the world. So grab your coffee, because by the end of this video, you'll understand how Europe built a fortress of wealth that barely anyone talks about. Private capital is money that operates outside the public markets. No stock exchanges, no quarterly earnings, no retail investors. It's the money of private equity, venture capital, family offices, and private debt. In short, it's the financial bloodstream of Europe's biggest transformations. Let's put this in perspective. While Wall Street grabs headlines for billion-dollar IPOs, Europe's private investors quietly fund over 10,000 companies across industries, from fintech in London to biotech in Switzerland to green energy in the Nordics. And the numbers? Private capital firms in Europe manage over 3.5 trillion euros in assets. That's roughly the GDP of France. But what makes it different is how it moves. In the US, capital is aggressive, fast, and public. In Europe, it's methodical, generational, and discreet. Private wealth here flows through family dynasties, the Agnellis in Italy, the Quants in Germany, or the Wallenberg family in Sweden. They've been building and investing for over a century, and they're still doing it today. But here's the paradox. Europe's private capital is both immense and underutilized. Unlike Silicon Valley, where capital floods startups overnight, European investors have traditionally been cautious, even conservative. The result? Europe often creates great ideas, but America scales them. Think about it. Spotify? Founded in Sweden, scaled in New York. DeepMind? British, bought by Google. Klarna? Swedish again, but constantly looking abroad for valuation. This raises the big question. Why is Europe's private capital so quiet? Why does it move slowly while the US races ahead? There are a few key reasons. Regulation. Europe's financial systems are fragmented. Each country has its own rules. Culture. European investors tend to think long-term and avoid speculation. Scale. There's less risk appetite for 100 times moonshots, but that's starting to change, and fast. Over the past decade, Europe has quietly entered what experts call the age of private capital awakening. Across the continent, new players are emerging. In Paris, Ardian now manages over 150 billion euros, making it one of the largest private investment houses in the world. In London, CVC Capital Partners has grown from a niche fund into a global powerhouse, with over 170 billion euros AUM. In the Nordics, pension giants like AP Fonden are pouring billions into renewable infrastructure. Meanwhile, family offices, private investment arms of wealthy families, have multiplied. In 2008, there were around 1,000 of them in Europe. Today, there are more than 6,000. They invest quietly, not for the next quarter, but for the next generation. These investors are powering Europe's transition economy, financing solar and wind projects in Spain, backing deep tech in France and Germany, investing in green hydrogen in the Netherlands. And they're doing it without fanfare. No flashy IPOs, no Twitter threads, no crypto hype, just long-term conviction. But the real story isn't just that Europe's private capital is growing, it's how it's reshaping power. Here's where things get fascinating. The world is entering a new economic era, one defined by deglobalization, energy transitions, and technological sovereignty, and Europe's private capital is positioning itself at the center of it all. While global markets chase quick profits, European investors are securing the infrastructure of the future. Data centers, semiconductor facilities, renewable grids, logistics, and cybersecurity firms. They're investing in assets that can't be offshored, assets that will define Europe's strategic independence. And unlike public markets, which rise and fall with emotion, private investors can wait. They can invest in decade-long projects without worrying about quarterly reports. That's power, quiet power, the kind that builds nations, not just portfolios. One executive from a Nordic private fund put it perfectly. Our goal isn't to exit fast, it's to own Europe's backbone. That's the essence of this story. Europe's wealth may move slowly, but it moves with purpose. So what's the takeaway? Private capital in Europe isn't flashy, it's foundational. It doesn't create hype, it creates infrastructure. It doesn't seek attention, it seeks endurance. As global markets get noisier, Europe's quiet money might just prove to be the smartest voice in the room. If you're an investor, entrepreneur, or simply someone who wants to understand where the world's wealth is really shifting, keep your eyes on Europe. Because while everyone looks at Wall Street, Europe's silent investors are already shaping the next decade behind closed doors. If you found this video insightful, don't forget to like, subscribe, and turn on the bell for more deep dives into the hidden forces shaping our world. This is Finance Facts, helping you understand the money that moves everything.